Hello, welcome traders, welcome to the live stream. My name is Jonathan Kibler, Senior Market Analyst here at Blueberry. We're going to be going through and going over the latest inflation data out of the US, which comes out at 1:30. So we're going to look at the market, we're going to have a little look at some prices, we're going to see what price is doing heading into this key inflation data, which today is the producer price index. I think I put on the stream CPI, but we had CPI on Wednesday. Today we actually have the producer price index, and this can be a leading indicator of consumer inflation. So we're going to be taking a look at this inflation data coming up. Hello everybody. Hello Mr. Kojo, welcome. Hello Vincent, hope you are both doing well today. We're also going to be taking a look at some other markets as usual. I feel like the markets are kind of set up in an interesting position at the moment. We discussed on Tuesday Euro Yen, Euro CAD, and the pullbacks in those markets. So potentially there could be a little bit coming up from those. I'll go over the heat map, see where we're at the moment as well, and then we'll go from there. Welcome Irfan as well. Hope you're doing well. But this is the main thing that I wanted to keep our eye on today. It was this PPI data. Now we had CPI out on Wednesday, which was fairly positive for the US dollar. You can see that it went in at 0.4%, up from 0.2% and beat expectations. So usually in that scenario there, that's pretty positive for the currency. Since then though, dollar hasn't really got a grasp of the markets. You saw a little bit more of a sell-off rather than anything to do with any kind of bullishness. But we're going to take a look at that in a little bit more detail as well. I do not necessarily want to bet against the US dollar at the moment, although we are starting to see that sort of bearishness come in on the chart, and the chart's kind of telling us that there's that weakness there. I'm a little bit skeptical of it for now, because you've got inflation which is rising. You can see actually from the bond yields as well. This is the dollar index, that purple line there. And if we head down to the US 10-year bond yields, you can see that bond yields have actually been rising since February the 7th. So we've seen quite a decent rise in bond yields, and usually that flows into the US dollar. And we haven't seen that really. If we look at sort of how the performance has been from the dollar index, it's had a couple of days of downside or 3 days of downside, while bond yields have risen. So bond yields are telling us that there's a potential for the Fed to leave rates unchanged, which is exactly what the CME Fed Watch tool is telling us as well. So for the March meeting on the 19th, there's a 97.5% chance of no change. So I think that's more favorable of the US dollar. And actually, Joel, you just come in and said the exact same thing there. Yesterday's news was favorable for the greenback, which means that gold could lose some ground, but the exact opposite happened. I've been trying to understand why, but I can't seem to figure it out. Trying to understand why can be tricky. At the end of the day, the market's going to tell us what it reacts to. And, the thing with gold at the moment is the correlation between gold and the US dollar at the moment is not very strong at all. Typically, when you see the US dollar rise, gold would come off. That hasn't happened. And the reason being is because gold at the moment is being bought up fairly heavily by central banks globally. So any kind of dips are being bought up immediately. And I think we're likely to see that continuation. There's a lot of BRICS nations out there as well that have decided to kind of buy into gold just in case there is this risk of de-dollarization that happens. So there is a lot of physical gold being bought up at the moment. And when physical gold gets bought up, there is more demand for it. And central banks are the big reason why we're seeing a huge drive up in demand of gold. So yes, usually you would get that strong correlation with the US dollar and gold, because gold is priced in US dollars. But it's not always the case. There can be other factors that drive gold prices, and one of them being a big factor is we're seeing a lot of central bank buying of gold at the moment. So I like the kind of theory there, but just to kind of understand it a little bit better, you know, try and look at your correlation charts and stuff, and have a little look at the correlation between gold and, you know, I know a lot of people try and put it to the dollar index as well, or euro dollar. So if you have a little look at gold and euro dollar, they have a inverse relationship, and you're not really seeing that at the moment. You see an inverse head and shoulders on cable. Yeah, we need to talk about cable, don't we? Because and this is why I had cable up. I'm actually doing a video. I was just editing a video before coming on stream, before talking about the pound. And the reason why I want to talk about the pound is because it had a little bit of a boost. Had a little bit of a boost today. If we go down to the hourly chart and have a little look, today, 7 a.m, we had some data out, and the data was GDP data, and GDP came in a lot better than expected, which was this month-over-month data of GDP coming in at 0.4%. So that beat expectations there. If we just open up the graph, you can see that GDP was actually forecast to come in at 0.1%. And there was many expectations, or I've seen a lot of reports recently that the UK could have been going into a recession. Now, usually the technical of recession is 2 quarters of GDP negative, is usually the way you kind of talk about a recession in the markets. But there is, I don't think, let me go to tradingeconomics.com and let's just have a quick look at quarter on quarter. So GDP Q4 2024 coming in at 0.1%. Yeah, so this is quarter on quarter data. So the GDP growth rate, if you see 2 quarters of negative, that usually is what they call a technical recession. And there was fear that that could be happening in the UK, but Q4 data came in at 0.1%. And we had obviously GDP month on month prices here coming at 0.4%. So there was actually a little bit of a boost to cable, and we saw cable prices move higher up into that 125 handle, but it's rejected it since. It came up into 125 and it has rejected it since. This is an interesting story, I think, for now, because, you know, we've been talking about the fact that GDP is going to play a big role in what's going on in the UK, and the fact that we've seen a little bit of a boost, but we've seen a sort of sell-off in pound US dollars is quite interesting to me. I think if we get PPI in higher today, I think pound dollar downside is looking a little bit more likely. So we'll need to keep our eye on that. Mr. Kojo, which direction for gold? Honestly, I only see gold upside. That's not, you know, advice to go and buy gold at all. I personally see gold hitting that $3,000 target level, mainly due to the fact that even when you look at a commitment to trader report, they're not showing heavy selling there either. Contracts are not necessarily at extreme levels, so I still feel like gold prices will move higher. I don't know how you trade though. I don't know if you're looking at it from a scalp on the news or whatever like that, but you know, I would be kind of more bullish on gold because I'm bullish on silver. I've actually entered another silver position, guys. I feel like I've been buying silver all year, so I will go and show you that one. But yeah, cable interesting. If we get that close in, we get a good PPI report, I can see cable closing bearish. That could be interesting because we're at that 125. But let's move on from that. Let's just quickly flow over to silver, because yes, gold is very bullish. Market is pushing higher. I think on Tuesday we talked about, you know, a bit of a pullback and a continuation for gold. Yeah, that seems to be kind of flowing through at the minute. Silver, on the other hand, starting to become bullish again. Been pretty bullish silver, and I've actually took a position on this candlestick yesterday. this one in here, this blue one. I should probably put an arrow instead. Let's make it a little bit more visual. But yeah, I've bought this candlestick here, and I'm long from $32. Looking to see if this can go up towards $35, potentially first targets of $33, and then looking to see if we can push up to $35. I've gone with low risk on this because it was an hourly chart trade, so I've only gone at 0.5% risk on this. So if it does come and stop me out, I'm not too fussed, because yesterday we saw, this was the actual CPI data yesterday, right? So we actually had that CPI data come in, which was bullish US dollars. Silver moved lower, kind of tapped into this area here where we saw strong buying previously, and then closed higher again. So to me, that was like, okay, well, on dips, there seems to be strong buyers of silver at the moment, and that's good for me because I want to be buying silver. So I can kind of see, you know, my entry. Let me just put my entry and stop on. My entry was $32. My stop loss is $30.97. That is. I don't know if that reflects on here as well. Obviously brokers pricing different things. That's my trade with a target up, target 1 of $33.40, target 2 $34.80, or around about that $35 area. So I think we've got good risk reward ratio here. I have a 0.5% lot size, and not lot size but risk on that, so 0.5% risk. Reason being, like I said, is because this was more of an hourly chart, and I was looking at the, you know, at the moment I've been swing trading a fair bit, and I'd say this is a swing trade, but I was looking to see how I could get a potential 4-hour chart set up, but because the pullbacks on silver have been fairly shallow, I've just been, you know, looking at potentially trying to get in on a little bit of a lower time frame. But yeah, when you look at the 4-hour close, it looks fairly, you know, it's pretty much the same as where I bought in anyway. So I don't mind that trade there. I'll see how it plays out. I can see PPI data coming in, driving prices lower if it is good, and then, you know, we might get a similar reaction. I just like the reaction from yesterday's news that should be technically strong dollar, and it closed, you know, bullish here. So I think silver will also get a bit of benefit from the gold silver ratio as well, being up at that sort of 90 area. Just basically means that silver is undervalued versus gold, so I feel like investors usually go for something that's a little bit more undervalued, so they'll start pushing into silver, and silver will get the flows of gold rather than people trying to get into gold. Can we check EJ is a nice daily pin formed at the key level? Yeah, sure. Euro yen alike. There was I was going to enter short euro yen, but I've stayed away from it. We broke trend here. You see my alert was on, and we've closed lower. The reason being is because I have entered a New Zealand yen short at the moment. So they were both setting up. New Zealand yen set up first, so I took the New Zealand yen trade over the euro yen trade. But this was something, again, that we discussed on Tuesday. Now, price has rallied a substantial amount since then. It's just whether we count this as a low in the market, because obviously we gapped lower, the market came up and retested it. Either way, this was like a pause point in the market. The market came and filled that gap. It started to trade lower again. One of the big things for me is when we in that sort of phase, you know, we can see that we're pulling back in that phase. If the market starts to change trend, that to me is a sign that we could see a little bit more, you know, a little bit more yen strength in the market. I'm a fan of buying Japanese yen at the moment. I will look to do it at areas where I think there is good areas of supply in the market. And euro yen coming up into that little area there, if that closes like that, could be the start of that primary phase for a continuation to the downside. I'd just be a little bit cautious just as how aggressive it got sold off yesterday, which I was a little bit surprised by, I must admit, because I would have thought that, yes, the CPI coming in a little bit hotter than expected would have been a little bit more of a risk-off scenario for markets. I know the VIX rallied, and then obviously in the US session it came off again, but I was expecting a little bit more oomph out of the Japanese yen, so I think we've got to be a little bit on the cautious side of this. But like I said, that being said, I am short Kiwi yen right now. I like this market to the downside. Weekly chart last week was bearish. This is some old analysis that we've had on here in the past, but essentially daily chart pull back into a very similar level. If you look left, this is a very obviously level that's been, you know, bought and sold at in the past. I looked at the hourly chart. We had a nice little double top situation going on here. Ended up just selling the breakout of that. Stop loss above the high. Again, because I've gone in on a hourly time frame, I've only got 0.5% risk. Okay, so 0.5% risk. I think it's good to be dynamic with your risk. You know when to go full risk, know when to go half risk. For me, these little opportunities that are being put in at the moment, 0.5%. Also gives me a little bit of leverage if, you know, let's say price starts trending back up here at the moment, comes back up into that kind of area where we had that sort of pause, and then it goes again. I could either add another 0.5% so that I can get full risk at that point, or, you know, if we start moving down and I know that the next sort of target zone is down here, I can try and leverage another position in, you know, with the profits that have been made here. So a couple of different scenarios that you can kind of play out in the market with those moves, because I don't expect this to just keep going. The market doesn't do that, right? I wish that this would be no drawdown and it just continues back. I could see us coming all the way back up into sort of this level here, that 87 sort of level, just above 87. I could see that happening. So, you know, I'm not naive to that. We're at support here now. Price could easily find a little bit of support before, you know, if we still kind of play with the fundamentals and the why, you know, is this market should be going short. We had data out of New Zealand as well recently, which was where is it? Inflation expectations. Okay, down from 2.12 to 2%. Okay, so that's heading more towards that target range for the central bank. Could the RBNZ start that cutting cycle again, start, you know, continuing to cut interest rates, whilst the Japanese yen are looking to hike interest rates. So I still like that narrative at the moment. So I'm still looking for those opportunities if they do arise there. So I'll be keeping an eye on that, just to kind of add a little bit more to it as well. When I look at the strength meter, New Zealand was one of the worst performing currencies last week. You can see that let me just zoom in a little bit. You can see that as -5, whereas Japanese yen +7. So that to me is, you've got the why, strength and weakness, you've got the strategy set up, you can just play your probabilities then. Okay, so hi Ratish, hope you're well, hope you're doing well. Tony, ending the week back stronger. Yeah, let's see if it continues to play out. Like I said, I was a bit unsure of why we didn't see the yen push when we had, let me just pop that in here so I can find it easily. When we had that CPI push, I was a bit unsure of that. So let's see, we've got 7 minutes until PPI. Forecasts are higher, okay, so core PPI especially, forecasts at 0.3%. And remember, 0.3%, when you see this on your chart, right? So when you go to, let's go to, I want to see if Trade and Economics has got the other one. Let's go to calendar. Yeah, US PPI, so core PPI, previous 0%, consensus is 0.3%. So your consensus is like your median. So they'll go and ask like a bunch of analysts and banks and things like that, their opinion on it, and they'll come back with some figures. But analysts don't really like to push the boat, right? They like to just keep things sort of mid-range. So the median of there is 0.3%. Forecast is 0.1%. So if we get anything like outrageously above these numbers, so let's say it jumps to 0.4, 0.5, I think that's fairly strong for the US dollar, and we'll probably see a decent move on that. Okay, so that's something just to keep in the back of your head as well. At the same time, we've got initial jobless claims coming out as well, which is going to be interesting. So that's going to add some fun to it. If we see a decrease in the initial jobless claims as well as the increase in core PPI above the consensus, above forecasts, then I think that could be very bullish US dollar. So we'll see how that one starts to pan out very, very, very shortly. Okay, it says 2:30 p.m. on there, but it is 1:30 p.m. I am. There we go. That's updated now. Let's just put on major. I'm going to clear these a second. I'm just going to put on United States, just so we can see that a little bit more clearly. So yeah, there's going to be a big piece of data coming up for the US. We'll see how that one pans out. We'll see how my trades pan out. Like I said, at the moment I'm bullish silver, bearish New Zealand yen. I've got a total of 1% risk on. So if it all goes wrong, then it's just 1%. Okay, we live to fight another day. Hi Jacob, hope you're doing well. What do you think about CAD yen? Sure, yeah, I don't mind. Actually, CAD's been a little bit more bullish recently. So I think out of all of them, I don't like CAD yen the most. I think if I was going to go yen, I'd go euro yen, pound yen, or Swiss yen, or Kiwi yen. Although Swiss yen at the moment, fairly bullish. I've just seen your comment as well, Vincent. Swiss has seen some strength this morning. Yeah, expectations came in of the Swiss franc CPI, sorry, coming in at minus 0.1%. It came in as minus 0.1%. So there's no big shock. And I think when you're trying to trade news, you need a shock. You need something that's going to go outside of consensus. So yeah, minus 0.01%. I think that's a good opportunity for people to take profits on that move. And when you think about the bigger picture of what's going on, the US bond yields are pricing in potential rate cuts. If it goes any higher, there could be potential for that. There could be a hike in the US. So if inflation doesn't get under control, then the US could actually be stuck at higher rates for longer. What are the Swiss National Bank trying to do? They're trying to, well, they've actually stated that they could go negative interest rates again. Kind of makes a good setup for the carry trade, doesn't it? Dollar Swiss long. So I still like dollar Swiss long, to be honest. I was long on Tuesday. Come out of that trade on Tuesday, just in here for a 1.4. Price came back and stopped me on my stop loss at 1.4. It did actually eventually go and reach targets off of that US CPI data. But, look at this. This is a lovely move to the downside now. In fact, I'm keeping my eye on this very, very closely, because if I wanted to be a buyer, right, and get a good price, up here isn't a good price. That's not a good price for me. Where's a good price? Down at these lows where these buyers came back in the past. So I wouldn't mind seeing dollar Swiss back at 0.9. I think that's a good area for a bit of a value trade. But let's see what happens. We'll see what happens very, very shortly. Got about 3 minutes until the data. Hi, Sean. What do you think about pound Kiwi? Yeah, I mean, honestly, I thought this would be lower, but Kiwi has just continued to sell off, and the market's moved higher here. It looks like the market is still playing that weakness on New Zealand dollar and the Australian dollar right now. Now, whether that's because there's been tariffs on sort of, steel and aluminium that have recently come into effect, which kind of directly impacts China, but then indirectly impacts New Zealand dollar and the Australian economies. So maybe we're seeing that kind of flow at the moment, and because pound got a boost from those GDP figures, we're seeing upside. Honestly, right now, I can't give you a straight answer on that. I don't like trading that market at the minute, pound Kiwi. I think there's better markets to go and have a little look at the moment. So we're coming up into let's pick a chart to go and have a little look at. I think pound dollar could be a good one because there's a lot of volatility around today. What I might do is I might take off these, and what we might do is put on let's put on the counter channels, and let's go for a 50 moving average, and we'll go for an ATR ATR 10 on an hourly chart, ATR 14 multiplier. Go for a 3R multiplier on that. So this is just basically, so if you're unfamiliar with counter channels, Counter created a sort of a moving average band essentially, but the bands are created by the average true range. So the 50 moving average is the moving average through here, and then I've just created an ATR band essentially. So usually when price kind of hits the upper top of the band, it means that you are, price has moved a certain ATR away from that area. What we actually need to do though is put that on a different chart, because that's going to be on I want it on the daily. And I want it on the daily. I want it on a multiplier of 1. Let me go back to 10 as well. Okay, that's better. Sorry. Basically, that is your ATR areas there. Okay, so if price on the data shoots down into this low, it's going to go beyond the daily ATR. Okay, which often can lead to price kind of pulling back a little bit. You can see it here, see a little bit here, and obviously when price extended out of the band before, there's been times where it's dropped out of the band, but that was the gap over the weekend. But you can see like you had that kind of ATR sort of effect here, and this is when you get a big trended environment in the market. So we'll see if we get a little bit of a push down towards these lows. Although I've said that, and the data should have dropped by now. So we did get a big move. PPI coming in at month-on-month 0.4%. So the consensus and forecasts were 0.3% there. Core PPI is down actually. So core PPI is down at 0.3%. That's in line with consensus. Initial jobless claims a little bit better than consensus. The forecast was 215, consensus 215. So that's down. That's positive US dollar. So everything that's been pretty positive. PPI was positive. Core PPI came in as consensus. So there wasn't a huge shock there when it comes to core PPI, which I think is where the market's focusing a lot of attention at the moment. But let's go and flick to see what's happening then, because we're not actually seeing that dollar downside. Nothing has happened on that data. Let's go to a 30-minute time frame. Might be just looking at an hourly a bit too far out. Let's go to a 15-minute. Hi, just nothing. Hope you're doing well. There's been this talk about the Fed monetizing its gold reserve. What's your take on it? I don't know. I haven't actually looked into that too much. I know they've been talking about other kind of reserves, digital reserves, when they've talked about Bitcoin reserves, but the Fed can't actively get involved with doing anything with Bitcoin. I've not seen too much on this, to be honest, Sam. So I can't comment on that. I've not really been heavy into gold prices at the moment. I've been looking more across FX. Hi, right guy. Hope you're doing well. Why Blueberry don't provide stop loss in high volatility? In high volatility, is that Blueberry don't provide? You should get a stop loss. You should have a stop loss. I use stop losses and everything, so there should be some kind of stop loss there. If you've got a problem with a trade or something, reach out to the support team. Go to the website, reach out to the support team, and if you've got evidence that prices, not perform the way that you think it has, please reach out to them. I'm sure they can do something to help as well. Trump is reportedly meeting the Russian president in Saudi Arabia to discuss ending the war. If this leads to progress, I'd appreciate your views on possible opportunities and key sectors to focus on. Honestly, I think if he can do that, if he can get the war done and over, then I think that's going to be really positive for stock markets. How that will impact currencies, I think, is hard to say. I don't know if I've ever witnessed something like that before, so it's hard to say how will that impact things. Let me have a think on that. You know what? I'll put it in my notepad, because I can either create a separate video of it, or we can have a discussion on a live stream. But I can do some more research on that for you. I mean, when it comes to like risk on and risk off, that to me would be, risk on, definitely. So in my head, that would be very positive stock markets. You might actually see the outflows of gold at that point, I guess, because when Russia invaded Ukraine, had this huge spike in gold prices. So maybe you'll see the opposite. In that case, there might not be a need to hoard as much gold at that point. So there might be a little bit of that going on. So I'll have a little look at some scenarios, and then, we can kind of talk about in depth some sectors that can be influenced by that. Off topic, can we expect to see Blueberry? I do believe so. I'm just going to put that out there. I don't know whether I'm technically allowed to say that, but I do think that Blueberry is considering, or TradingView are considering Blueberry on there. So I know this is something that has been asked for a good while, but I've seen some plans. They told me that stop loss is not triggered 100%. They told me that stop loss is not triggered. Okay. I don't. Then AI3, I'd probably. You've saying that you've spoken to support. Unfortunately for me, I'm not on that side of things. I'm only here as doing the analysis and stuff like that. So I'm not on that side of it. But I'm sure if you've got evidence to suggest that, then something should be potentially done about it. Stop losses can slip. It doesn't, it happens all the time across lots of different things. When volatility is very high, stop losses can slip. It's not just common in FX trading, it's common in stock trading, it's common in futures markets as well. I was watching the S&P 500 futures when Trump announced some tariffs, and I was watching a friend of mine doing some trading, and unfortunately he couldn't get out of his position. He was short on the position, and unfortunately he couldn't get out of the position in time because the volatility was so high. And it can happen. There is an element of a risk that can happen. But hopefully it wasn't too damaging to you. But this is the important thing as well, guys. If you trade in FX, please be aware that please be aware that there's gaps that can happen, especially in this current market environment that we're in. Trump in presidency, every time he talks, big things happen in the markets. I mean, the past 2 weeks alone, we've seen gaps in the markets. Okay, big gap here. So just be aware. I'm not holding any trades over a weekend really, unless it's something that I don't think is going to be impacted by tariffs directly. So let's say silver right now, I'm happy to be silver long. Would I hold that over the weekend? Probably. Kiwi yen, would I hold that over the weekend? Probably, because I don't see those markets being too heavily impacted right now by tariffs, because Donald Trump has quite a good relationship with Japan. He's not directly targeting New Zealand right now. He's more focused on sort of China, Canada, Mexico. So if I am in a trade that involves things like Canadian dollar, directly US dollar, so things like if I'm euro dollar short, dollar Swiss long, things like that, I will be looking to close those over the weekend. I got very lucky a couple of weeks ago. I was long US dollar, US dollar Swiss. Price gapped higher, so I was very lucky that it gapped higher. I ended up taking some profits on that. Let me see if I can show you that. Where is it now? Dollar Swiss. Put it on the chart. Right, this was my trade. Okay, this was the gap here. Right, so it gapped higher. I ended up coming out at this resistance level in here. Okay. So it can work both ways when it comes to sort of slippage and gapping and things like that. This was my other trade from the other day where I got taken out on that hourly low, hit TP, and then it's come back. So I'm looking to see, can we kind of come back down into this area here? So let's see how that one kind of plays out. At the moment, starting to see dollar Swiss continue lower, so I don't mind this. Price can come back down to these levels here. I didn't get the buy from there, which was disappointing for me. I should have bought that this area here, but I didn't. I waited, and price then gave me an opportunity on a bit of a breakout on a lower time frame, so I traded it up. So we'll see. But yeah, just be aware over weekends. There's going to be gaps, and we need to be very, very aware and careful about what's going on. Yep, no weekend trades for me. Yep, like that. Do you see the higher lows? Into resistance on GU likely to break higher with no reaction from the news? That's a tough question. I think what I would suggest, I would just wait for the market to do it first, instead of trying to anticipate it. Right now, there's things you can do. Obviously, if your bias is pound US dollar downside, and you're looking at this as, okay, this is a significant area where sellers have come back into the market, they could appear here again, right? And you could see that kind of double top play. But I think if you're going to play that move, you've got to wait for some kind of rejection. You've got to wait for some kind of, like, let's say price breaks out of this high but can't close above it. That would be a sign for me that it's failing to make a new high. That could be a trigger point. I think if you're looking at, higher lows coming into this area here, the most likely idea would be to reach that high. If it makes a new high and clears resistance, then I think you've got to start opening and going, okay, well, if it's doing that now off of, you know, the news, is the market trying to price in something a little bit different? And are we going to be heading up somewhere else? You know, when I look at the daily chart, if we breach this kind of 125 handle, where's the next level of resistance? Well, you've got this kind of area up here towards 127, or you've got this kind of 128 handle, right? Anything in there could be the next point of resistance. I just think if it clears this 125, then it opens the move up for a move up into that sort of 128 handle, 127 handle for me. Do I see that? I don't know. It's hard. You know, at the start of the week, we saw the commitment to trader reports, and they were saying that there was a 6-month extreme on pound. In my eyes, that's a potential for pound to get stronger. And we've kind of seen that flow come in. But at the moment, still pretty, you know, pretty stuck around this 125 handle. So, yeah, I'm quite interested in some downside here. And, you know, a big part of that plays into what's going on over in the bond yield market. Down 1.15% today, though. But if this closes higher on the day, you know, I don't think we can ignore that kind of move there anymore. And look at the weekly chart on the bond yields. If you were just a technical analyst and you were looking at this, you'd be like, this is a nice upward trend, right? And there's still a good chance that bond yields go up to 5%, right? And that would be big. That would be US dollar higher, you know, probably breaching those 2022. We already breached 2022 level. It'd basically be dollar index up towards the 2022 highs. If you see bond yields at 5%, that'll be euro US dollar down to parity. That'll be pound US dollar down to sort of 1.2, I reckon, at that point. So, yeah, I don't think that story is over yet. We're just getting this kind of short-term pullback at the moment. So, good question though, Vincent. Good question though. Nothing will technically change here on the currency strength meter either if it did close like this. So, have a quick look at Kiwi yen. I'm trying to try and breach these lows at the moment, which would be nice if we can kind of flush these lows. I'd be happier with that. What's silver doing? Silver's not really doing a fat lot. Let's see what other data we've got coming up. Maybe some more US data coming up. We've got a 30-year bond auction actually at 6 p.m. and Fed balance sheet at 9:30 p.m. Tomorrow is going to be a big day today as well. Retail sales. Retail sales is going to be big because this is going to tell you what the consumer really thinks, right? If you start to see some big downside on retail sales, then, you know, we could possibly see some big falls in the US dollar. Stock markets will get a hammering on that. Let's see how the stock market did do after that, actually. Rebounded higher. It's actually gapped higher, drove to the downside, and then moved higher again. That is a wacky looking candlestick, isn't it? Yeah, stock markets are very interesting right now. I like the idea of buying the Dow, but I haven't bit the bullet here yet. Maybe if it can make a new high on the hourly, I'd consider it. But let's delete that one now. I haven't took a position here yet. We did take out these highs. Tried to hold above it, but there was no further buying action there. That was CPI, PPI. So it's interesting to see the market's reactions. It's reacting more to the CPI data than it is to the PPI. Now, PPI is actually a bit more of a leading indicator than CPI, because CPI is actual, whereas PPI is leading. And the fact that that's gone higher, the market hasn't even budged on it. Both Tesla and Nvidia have seen weak performance recently. Does this suggest a broader downward trend or just a temporary stock market correction? Yeah, I mean, these to me are overpriced anyway when you look at Nvidia. I mean, just that 2023 on its own, 2024 was substantial. I should have bought in here, $95. We talked about this as well on the stream, I'm pretty sure, was the fact that this was a good level to be a buyer of. But yeah, that's the problem you've got with something like the S&P 500. The concentration risk is really high. So, you know, you've got the top 7 companies in the US, which are pretty much just dragging this higher. Let's see what Apple is up to at the moment. See, Apple is climbing again. Yeah, that 199 area was an area of interest in the past. I think these are overvalued personally. I don't like the idea of being involved with them, but I'm pretty sure Nvidia came out and it had good earnings, no? We've got earnings and revenue coming up on the 26th. Dividends. I mean, it doesn't beat that Q2 of 2023, does it? But earnings still up a little bit. I know Barclays were doing well today. Just to kind of go off subjects. Barclays doing a big buyback deal as well, which is usually pretty good for a stock market. Starting to see some flows coming into the market now. I can see that the dollar's starting to pick up a little bit. Euro dollar coming off a little bit. I can see that because my silver position is starting to move lower. So I'm just coming into an offside. We're actually coming into near break even on silver at the moment. Starting to see a little bit of push down here, which I believe would be reflected on gold as well. So we'll see if that kind of holds up like it did yesterday, where we got this push down and a big push higher again. But yeah, just nothing. You're right. I mean, Tesla is. I don't know how Tesla continues to. I mean, actually, it's dropped much lower. Much lower than when I last looked, because their earnings was bad. I know that earnings was good here, but I mean, earnings was pretty bad throughout this period as well. I mean, I've talked about Tesla at length in the past. It's just cult-like, but I think he's actually doing a disservice to Tesla at the moment, because he's got this role within the government. It's actually impacting sales of Teslas right now. People think that, you know, especially with the video of him doing a certain hand gesture, which I just don't think is a very smart thing to do. Anything for a very, well, they say he's a very clever guy, but he has clever people around him. But for a supposed very clever person, that wasn't a very clever thing to do. And I think that has actually impacted, you know, Tesla in a big way. A lot of people now just don't want to drive Teslas, just because it's associated with Elon Musk. So I find that fascinating. I find that absolutely fascinating. What do you think of pound CAD to the downside? I don't mind pound CAD to the downside, to be honest. I think pound CAD is on the currency strength meter. Let me have a look. Yes, so pound CAD is a sell on the currency strength meter. Pound has been obviously losing ground. CAD has been doing. I don't mind this actually. Nice little resistance pocket in there, right, guy? Let's have a quick float on the hourly chart. Yeah, I don't mind this. I would like to see some kind of, you know, breakout move. I mean, when I look at the last significant low that formed, I'd say it's here on an hourly chart basis, which would probably be reflected in that 4-hour chart. Yeah, that kind of 4-hour chart low. So, you know, if we can get like a little bit of a bounce higher and maybe some kind of then breakout, that'd be good for your reward to risk ratio. This looks very similar as well. We talked about EUROCAD on Tuesday. That's come up into the level and it started to reject as well. So, you know, this to me is looking pretty good as well. If we get a nice little, again, kind of push up, maybe a breakout here, that could be a nice little bit of a move to the downside. Just currently retesting those 4-hour lows at the moment. So keep an eye on that. Kiwi yen still going, which is nice. But yeah, I like that pound CAD move, to be honest. I don't mind that at all. Weekly chart last week closed significantly bearish off of these resistance highs. Daily chart, you can see, is really like failing to drive higher right now. You know, although we've got this kind of big pullback, the momentum is still for me to the downside. Just need to see, you know, it flip into that primary phase, and then you've got potential for this market to go to 177 or even down to the 175. So yeah, I don't mind that market at all. I think that's a good market to keep an eye on going forward. Have a quick look at our Swissy pairs then, because Swiss franc obviously had a strong performance today. Seen that big move down. So yeah, I mean, I think this is a good thing because we know that the Swiss National Bank are going to go negative rates, or they've pretty much said that they are. So, you know, I think that just because it's pulling back doesn't mean it's a bad thing for us right now. It's just about timing that trade, timing where we could get a good value. You know, if I was looking at 0.92 as targets and, you know, I wanted to be a buyer here, you know, that's negative risk reward ratio, especially if you try and put your stop loss below these lows. The closer I get to that low there, the risk reward ratio starts to become healthy again. And so I want to be looking at down in this area anyway. I'm going to pop a little alert there, to be honest. See if we can get a pullback into that area. Any other questions, guys? I feel like we've had a very good discussion today. There's been lots of good questions coming through, so I really appreciate that. Especially from you, Joel, as well. Good. I like that. Just nothing as well. And Vincent, right, guy. Really appreciate the questions that have come through. And Irfan as well. Checking that EJ level out. So let's have a look at that, actually, because it looks to me like the Japanese yen is starting to gain some traction. So Euro yen looks to have, yeah, it's kind of following that same path as Kiwi yen at the moment. So we shall see if that can continue. It's just a shame that silver started to come back a little bit. But I will keep an eye on that. So do you think silver is going to be something important? One thing that I was looking at today was aluminium. Just click on one of these. Now, Let me see if there's a futures. Futures. Yeah, I'm not going to be able to get that. Is there a COMEX? There is a COMEX. Aluminium futures. Probably on the weekly chart though. Because aluminium is used in absolutely everything. And I was watching videos of how it was made today. And it's actually quite an interesting process. But basically, a lot of the mines are in tropical areas. And there is a significant mine in... where is it now? In Dubai, I think it is. There's quite a significant mine. Or the UAE, at least. And they actually get it sent over from Chile, I think it was. So they then get it shipped over, and then it gets put into this kind of like smelting process. It was really interesting to watch. But yeah, I was looking at this because obviously aluminium is going to be tariffed quite heavily, 25% tariffs. You know, I was looking at it in sort of 2018 where we had that kind of initial tariffs coming in from Trump, and we could see that aluminium prices fell in his sort of presidency. Initially we had a bit of upside, but then those tariffs came in and started to fall. So I was looking at aluminium prices where they were. This is priced per ton, so $2,587 per ton. But I thought this was quite interesting because China and Russia produce a lot of aluminium, and there could be some scope that those tariffs could impact whatever they're trying to do. It would impact China massively, I think, in that sense. But it also impacts Russia, which I find was quite interesting as well. Whether that reflects in any kind of moves in price here, like I said, I don't think I've ever traded aluminium, so it was just something I was a little bit interested in earlier today. Just like risk current, so the risk hasn't really jumped here. I'm looking at the volatility index. Volatility hasn't really jumped higher, but a lot of risk currencies getting slammed at the moment. I mean, look at the Australian dollar across the board. Aussie CAD, Aussie yen, Aussie Kiwi. When I look at sort of Kiwi as well, that's just getting slammed across the board right now. So very interesting there. Very, very interesting to see that. Stock markets are up. So you don't typically see that. So there's a bit of a mismatch going on in the markets here. Silver now pushing back to the downside. But we've been going for about an hour, guys. Pound Aussie, let's have I'll quickly go over Pound Aussie. It's been pushing up this week. What's your take on that? Yeah, I mean, Pound Aussie, Pound Kiwi, I don't think I like, buying these. I mean, don't get me wrong, that area there was a good area, wasn't it? I actually think, did you say this on Tuesday, Vincent, that you were looking at long Pound Aussie? I said if it's going to go long, it's probably going to go long from here, because that's that nice consolidation before being bought out. So it has technically continued to push to the upside. We've even kind of completed that 4-hour head and shoulders pattern now. So yeah, there's good scope for this to go higher. Obviously, the market is still selling the Australian dollar and New Zealand dollar quite aggressively. I just don't know if I want to buy the pound. I just don't know if I want to do that. So I'm going to stay away from buying pound at the moment. But right, guys, we've been going for about an hour. I'm going to leave it there. Thank you to everybody that attended and asked questions and things like that. I really appreciate it. If you've enjoyed the stream, leave me a thumbs up. I'll be back on Tuesday live at 2 p.m. this time. Did that a little bit earlier to cover the news, but didn't really do anything to do the news. So hopefully on Tuesday there's been a bit more movement in the market that we can discuss the week ahead, essentially. But thank you for everybody that came and asked questions. I've made some notes of those questions so I can try and answer them in a future live stream or a future video for you. So I appreciate that. And I'm going to leave it there. thank you guys. Have a great weekend, and hope the rest of your trading week is a successful one. And I will speak to you very soon. Cheers, guys.